Hello guys, it's Imi here from AIMS Stress-Free Trading, your host. Right, I'm going to record this video. I know the audio is working. I'm just going to do a quick one. So this morning we started with a gap on DAX, London Open. A blue dot followed by a black here, but then a blue again. It's kind of the tricky situation where you have to kind of anticipate what's going on, and London Open brings in with it volatility and stuff. One approach would be to don't take a trade at London Open because it's not quite sure many times. Another approach would be to always take a trade at London Open because sometimes you have those massive breakouts at the expense of course, whipsaws. Today it wasn't kind of it was quite a funny kind of price action, and I got in here. So let's go step by step. And so the M5 level was here at 9581.3. 9581, yes, okay, so we got in up here, and then what happens is it goes up, stop loss comes down. As it goes up more than 5 pips, so stop loss would come to -4. This spike took it, and so in a way it was a disciplined trade. But if the -4 move was not done and stop loss was left at -7 or -8, we could have seen some profit, and that would have been a good start to the day, because after this it was quite boring morning and rest of the afternoon. As we go, we have this blue dot. We were not interested to go long here. This was after this, around this area. Well, you would be looking to go long, but you want this to come a little bit further and the price to come back to the purple. Something like this. It comes here on the M5. I hope you can see my cursor around here, and price would be somewhere here, and then alligator would sleep. Alligator from Grant, and when the two lines touch, that is it. Alligator is asleep. Technically, when the green is above red and both of these are above purple, you have the proper gator up. You have like a situation where it's trending, and if the green is below the red and these two are above the purple, then you have a sleeping gator, but the trend is up. Around here you have a sleeping gator and the purple is inside as well, so the trend is not really confirmed on this time frame. So you're looking for a breakout. For that you'll have to look at M1, M5. So if you looked at M5 was suggesting a long only because the gap was up and then it pulled back, so you'd be looking to go long here. So this was a good trade to go long here. And then let's go forward. So you'd be waiting here and waiting here and waiting here. It's different when it's happening live, because there are other levels, and minute by minute you're doing the analysis and you feel like trading. After the trading, if you look at this level, you look at it and you think, no, I'm not going short here. But when during the day I wanted to go short here, I was looking to go short because of certain other reasons, and that is when we lose our perspective. We become less objective. We're supposed to trade our setup. Here's another red dot. At this point you would see that the gator crossed over here. You would see that the green and red line cross and the AO cross are almost always in sync. So they would cross around this area or this area, you know, either 1 or 2 bars before the AO crossover, or sometimes a little bit later, but most of the time it's kind of in sync. So this is a very good mechanism to follow. So the crossover was here, and the crossover of AO was here as well, and that was about 20-25 candles. So we can call it AO is old. then a green old AO is relatively better for shorts, and a red old AO, when it's getting older and older, is suggesting price going either sideways to probably going up. I'll find some other example later on. Right, so we have another red dot here. Now the box is tight and the AO is old. What AO is telling us is a peak here, with a peak here, which is a divergence. So this is divergence. Then it goes up. This is a typical pattern where we call it a B trap, because you see aims low, aims low, aims low, high, 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 high. This is a stepping down pattern, and this is stepping down, this is stepping down, but this aims level here should have been lower than this. It should have been lower than the lowest, but it forms up there. This is the pattern that changes things. So when it comes down here and breaks this, often it's a B trap. If you wanted to take this trade, you will have the M5 level here. Let's see, 945. It would be somewhere, M5 would be somewhere here, and it will be this. This level will come and play, and you would say, okay, this entry is too close to the M5. You could have filtered it, or you could have thought, okay, the gator on M5 is open, so I can go short. So had you gone short on the M1 level, you would have taken a -4 hit. If you wanted to go short on the M5 level, the exit would be too far because it's about 10-15 pips. We didn't take this. The rules took care of us. This is a good setup. I mean, around these areas, usually you'd see after a wave like this, when it comes from here, you have a peak, divergence, and then another divergence here. So that's 3, 4, 5, and this hole is a 3 down and a 4 up and a 5 down, and then you have this move up. Usually you'll get a setup here. Now, as you can see, this green AO is old. It's not good for longs, it's old, but it's good for shorts. But when it's close to zero line, when the price is going sideways and this is close to zero line, it's actually good for both ups and downs. What would dictate is the setup, the other factors, and what is the trend, such as 3 down and you're looking for 5 down. Of course, that didn't happen. We had a green dot that would cancel everything, and then we have another red dot, and AO is now dark green, closer to zero line. Gator is asleep. Entry would be on the correct side of both 3 lines. You would go for it. This is a valid entry. We took it, and it was a good trade. Not profitable, but a good trade. So we have black dot here. This cancels everything. Nothing to do. We have a blue dot here with AO big. I remember very well. We thought AO is too big. We didn't want to trade it, and that's how it went. Here was another chance. Could have gone long here. It's something where the AO is old. It's kind of peaked, and this is a double peak. It's not a divergence because the high is not higher than this. It's a double peak. Double peaks usually suggest shorts, more further short moves. But since price broke up, this doesn't apply anymore. And if you had gone long, you would have either a rent or a break even. Then there's nothing going on here. Pretty boring day, you can call it. But actually, for me, it's quite exciting day in a way. You know, when you're playing, it's a difficult game today. It's good fun. I don't know if you understand me, but this is a tempting short, because these levels are 1, 2, 3, 4, and you'd think that if it breaks out, it would do something. It's 9572. Let's see, it's about this level, and the M5 looked like this, you would think it would break out and do something, although it didn't do that. And that's why we have very tight stop losses. So if you get in here, you get out for -3. And trust me, these are this pattern here, this formation, when it comes down, pulls back, hits a, and with this big move down and this ABC type up, usually it creates really good moves down, but it didn't today, for whatever reason. That's just the way it is. And then a bit of break time. Here we have a red dot. This AO is old, cancelled. Wait for something to happen. This is a black dot. Let me see. This wasn't taken, although we could have taken it here because the price had broken. Let me bring it on M5. Yes, it was this level, around this. Let's see, 9579.4. So when it broke this level and then it came and retested it, you could have gone long if you were so brave and take a 10-15 pips on this. And then we were waiting for a nice lovely price pullback to come back so we can do wave 5, but this broke out and it retraced more than 50%. In these two candles it reaches more than 50%, and in the chat room I thought, and I said it, I said I don't think it's a C down, it is something new. And it was something new, and then it started going down. So then after this move you would want it to come back here. Let's suppose we put this, you would expect it to come to 30 or 50% and then go down and give you a nice setup like it did. Here it came 50%, so it would come here and you'd go for a short, but for some reason I kind of knew what was happening. I did not take this setup, although it was a valid setup. The guys who took it, and if I took it, there will be nothing wrong with it. It's a perfect setup. And after that it was all over, and that's what it is. So Moti had 5 rents sitting at -2%. Most of the day I was sitting at -1.3%. Then I forced 1 or 2 trades that brought me to near break even. But one doesn't have to do that. Even if it was -2 or -1 day, it would be okay. So this process, this procedure that we followed today, it brings 70-80 pips a day. It brings -10 pips in a day, and sometimes nothing. Sometimes we have no trades, sometimes we have 7 or 8 trades, and it varies. But the markets are different every day, and in the past few years the strategy, the way we've been following it, it just gets exciting every day. The more you trade it, the more you understand it, the more you become disciplined, and you start loving it. And the more you love it, the easier it is. It's just good fun, and you have to do everything to learn to love it. This was yesterday's price action. Look at this setup. It was so beautiful. If we, just before I finish, change this to M5. If you look at this come in here and up, and then if you look at today's price action here, see this bit, see this price coming down and up, and this here down and up, and then this bit here on M5, and this breakout here, and this expected. There is absolutely no difference in this. I know they look a little bit different, but if you look at it, today's down moving up and this gap down, and then it's exactly the same, and then price coming back up, creating these dodgy type of candles like this, and then breaking down so beautifully into a trade, which didn't happen. It's the same thing. So if you keep following the setup, you just 60% of the time it will bring you some good trades, and 40 or 50% of the time it will bring you some rents, and you just have to put up with those rents. The thing is, when we lose a trade, we only lose 5 to 6 pips. When we win a trade, we often make between 10 to 20 pips. And all you have to do with that is have a 30% success rate, and in the long run you'll be profitable. But we know it, that if you follow the rules, the flowchart rules, you can achieve 65% success rate. So that's what it is. Red dot, tight box, you entered here, trail the candles, nice lovely 18 pips. What was the risk? About 7 pips, 6 pips, maybe even 4 pips, and you got 18, 19 pips. And this is what it is. You can never tell whether the setup will work or not, but what you can tell is whether it is a setup or not. And as soon as you find out it's a setup, without hesitation you take a trade and you go for it, because you know that when you lose, you're gonna lose only, let's say, 1 unit, and when you win, you're gonna win 1, 2, 3, even 4 units, and the wins are going to happen more than 50% of the time. But your main objective is to just have it even 50% of the time, and you're gonna be flying. I hope you enjoyed this video. There's not much in it. Hopefully we'll repeat this again. Goodbye. Goodbye.